Coming up on the 414 Live this afternoon, we'll be talking about how to get the most out of all of the government financial support that's on offer right now, plus how you can use it to grow your B2B business or agency. During the show, we'll be covering in detail all of the 6 funding schemes that are available, how to make a successful funding application, the mistakes to avoid, how to use it to grow your business, and how you can use it to win new customers and pay for marketing. Hello, good afternoon. My name's James Rostance and this is the 414 Live, produced exclusively for you if you're a professional B2B marketer or company executive with a hands-on interest in your company's sales and marketing. Welcome along. So, as mentioned, today is going to be a really cool, but also equally important show because we'll be covering in detail everything that you need to know to make the most, in fact the full use, out of all of the government funding that's available to help businesses, first of all, get through the COVID-19 thing, but also to do a bit of a rally after it. In fact, calling it a bit of a rally is hopefully an understatement. Thrive and grow and do incredibly well, even with all of this that we're up against and having to deal with. So, sorry about that, I've got a title sequence running in the background. So let me say again. So joining me then live from Ealing, somewhere in London, Mr. David B Horne. David, good afternoon, sir.
Hi, James. Good afternoon. Delighted to be here.
Thank you very much. Where in Ealing where in London is Ealing, by the way?
Ealing is in West London. It's at the western end of the Central and District lines.
That's the one. Okay, sure. There you go. I'm in Southampton. But yeah, well, thank you very much for joining me on the show this afternoon. We've got a lot to cover because, I mean, in terms of a rescue financial package, how significant is this compared to anything that's been done before by the British government? I think that's probably a good place to start.
Huge. This is huge, and what this is that's so different from any previous things is this isn't the government stepping in and bailing out, the banks like they did in the financial crash. This is actually the government stepping in and providing support to almost all businesses in the UK. And there are a few that have currently fallen through the cracks, and I'm working hard to raise awareness around that. But the schemes that they've put in place are designed to capture 90 to 95% of the businesses that are out there, large and small, but I'm going to be focusing mainly on the support for the small businesses.
Perfect. And I mean, yeah, when you think about it as well, it took about 2 weeks, didn't it, in total for them to get through everything? Is that about right?
Well, it's interesting. I mean, the first announcements came out at the end of the first week of lockdown, and they announced the business interruption loan scheme, and they announced the job protection scheme, and they were a little thin on details. So the concepts behind the scheme were great, and there was a lot of really positive noise going around that, here's the government really stepping in. And then as the details began to come out, a few questions started to be asked, and they've had to make a number of updated statements. But I think if you look at the size and scale of what's on offer, and the complexity of just the day-to-day running of the business of the UK, it's pretty fast. I also have clients over in Switzerland. The Swiss have reacted even faster, but the Swiss are known for being incredibly efficient. And the government just set out the rules and bang, off it went. So I think in the UK it's taken a little longer, but it's really starting to come through. I'm starting to see signs that the money is really starting to flow now to people, and there are a number of schemes that'll be coming live with the money flowing by the end of this month, we've been told.
Good. And yes, this is exactly why I thought it would be good for you as well, from what I can tell, as the UK's foremost expert in this field, for you to help the viewers and listeners through how to actually use the funding, because I can well imagine there's a lot of confusion as to what it's there for, whether it's applicable for certain businesses, and whether it's even worth doing. I think that's a common thread that I've come across.
Yeah.
Well, hey, so that's for you, the viewers and listeners, what's on the way today. So let's get stuck into this. And it would be worth me saying as well, if at any time you have a question that you would like to put to David, or something you would like to be clarified, please do put it in the comments section. It comes up on the 414 iPad to the side of the screen there, and I'll put them to David as soon as possible. Right. So the first thing we're going to look at then is, could you cover and talk us through the 6 different schemes that are available for businesses to help them through all of this?
Yes, absolutely. So first, I'll just tell you what they are, and then we'll walk through each of them. So number 1 is the deferral of the current quarter's VAT payment. So that's an immediate benefit to cash flow for companies that normally would have to pay a VAT bill. Number 2 is grants that have been made available, and this is relevant to anyone who has a rateable business premises with a value of less than £15,000 and qualifies for small business rate relief. Number 3, probably one of the 2 really, really big ones is CBILS, the Coronavirus Business Interruption Loan Scheme, or CBILS as I like to call it. Always reminds me of Basil Fawlty's wife. And that is a loan scheme that is being worked through right now, where businesses are able to borrow additional money where they otherwise might not have qualified to get a loan from their bank. Then there's 2 schemes that are linked to keeping people's jobs. The first one and the biggest of them is the Coronavirus Job Retention Scheme, or CJRS. Haven't been able to come up with a fancy expression for that one. But that is where employees get furloughed and get 80% of their pay up to a cap of £2,500. And again, I'll go through all the details. Then there's the self-employed income support scheme, which in principle operates on a similar basis to the CJRS, the job retention scheme. And again, I'll explain a few little anomalies and differences there. Those 5 are all new things that have been announced by the government. The 6th one is something that's been around, but they haven't really highlighted it too much, and that's a standard scheme within HMRC called Time to Pay, where if you're struggling to meet your tax bills, you can contact HMRC and agree a payment plan with them. And then not specifically linked to that, but there's one other thing I'd like to touch on at the end of those, and that is some temporary reductions in, or temporary lifting of the restrictions in UK insolvency law, where if you're a business owner, this is a really important thing to be aware of. So let's just go through those. Let's just go through those in detail. So the VAT deferral, this was announced on the 23rd of March. The 28th of March. 23rd was announced on the 28th of March, and basically any VAT that you are due to pay to HMRC between the 28th of March and the 30th of June, you do not have to pay that until the end of March 2021. So it's effectively a 1-year deferral of that VAT liability. So you'll
is it to everyone as well?
That's to everyone. No, that one's to everyone. So if you're a VAT registered business, you still have to fill in your VAT return. So if, for instance, you're on the normal calendar quarter, so your VAT period would run from January until March, and you would have to file your VAT return by the 7th of May, and normally you would have had to have paid your VAT on the 7th of May as well. That payment can be deferred until the end of March next year. You still need to file your return. If you have a direct debit instruction in place with HMRC, I'm recommending everybody to cancel those direct debits. HMRC says they'll not be taking them, but just in case there's a glitch in the system, you don't want them to take the money and then have to try and get it back. So if you've got a direct debit mechanism in place with HMRC for your VAT, just go in and cancel that for now. You can always reinstate it later. But that basically means that any VAT bill that you have to pay between now and the end of June, you don't have to pay it until March of next year. It's still a liability, but it's designed to help you with your immediate cash flow requirements.
Perfect. So that's scheme number one. Okay.
That's scheme number one.
Scheme number two, then. What's that one?
Scheme number two is grants, and this was announced as something that was specifically focused on helping the small business sector. So anyone who is in a rateable premises, so if you get a statement of business rates from your local authority that you have to pay as part of whatever your overall premises costs are. So if you're leasing an office or a shop or anything like that where you're paying business rates, then you'll be eligible for the grant. If you're working out of a co-working space like a WeWork or anything like that, it's unlikely that you'll be eligible for the grant, because the way those schemes work or those arrangements work is that you simply pay a fixed lump sum to WeWork, and they would otherwise be eligible to claim, but in this case they wouldn't, because obviously of the size of the business. But basically, as long as your business has a rateable value of less than £15,000 and you qualify for either small business rate relief, or if you're in a rural location, you qualify for rural rate relief, then you will be contacted by your local authority and they will let you know that you're eligible for a grant. In addition, and this was announced subsequently when basically all of the retail, hospitality, and leisure businesses were told to shut, they put in a second level of grant. So if you're in the retail, hospitality, or leisure sector, and your rateable value is up to £50,000, you'll actually get a £25,000 grant. Now, the great thing about grants is that you don't have to pay them back. That is money that the government gives you. And you will have to declare it on your company's tax return, because it's income that you're earning, but it's cash that is being handed out. All of the grants are being administered by the local authorities. And I'm really, really delighted to say that I'm seeing people getting grants coming through now. The initial guidance from the government was that the local authority will be in touch with you. You don't need to do anything. But I'm aware of a lot of people who've reached out to their local authorities and just confirmed that. And I'm aware of quite a few people who have already received their £10,000 grant. So that's one of the schemes that's working really, really quickly. And that's, again, a real help for people with cash flow, because that's literally 10 grand coming into your bank account, and there it is, and it's free for you to use.
So just to recap on that then, so anyone that is eligible for that grant, they don't have to do anything. They just quite literally wait for their local authority to contact them and deposit the money.
They wait for their local authority to contact them. However, based on what I'm seeing in the marketplace, there's certainly no harm in you reaching out to your local authority and just asking.
Perfect. All right. Two strong schemes already there.
Yes.
I guess the whole purpose of this, though, of course, is to, well, keep the economy running.
It's to keep the economy afloat whilst, I mean, this is unprecedented. There's a sort of a hackney phrase that was often used when stock market booms were on, and they said, well, this time it is different. Well, I hate to use it, but this time it really is different. Yeah. I mean, this will be the 6th global recession that I will have lived through in my life. And this one is strange because, all of the other ones have come about because certain sectors got over hot or people got overly greedy or whatever. And this one came about not because of any of those reasons, but because there's this bug that's trying to kill people. And the reaction from governments around the world has been to lock down. And, looking at the graphs and the charts, it seems to be working. Whether it's right or not, who knows, but it seems to be the right thing to be doing. But it's meant that literally economies are grinding to a halt, and the governments are having to step in reasonably coordinated ways and in unprecedented quantities of support in terms of money that's being made available to ensure that when we eventually get out the other side of this pandemic, that we'll have economies and businesses to return to.
Perfect. Right, well, so we've done that, and we've done the grants available for rateable premises. What's the third scheme we need to cover?
The third one is CBILS, the Coronavirus Business Interruption Loan Scheme. And this is one of the ones that's had a lot of negativity in the press and a lot of issues with, why is it taking so long? And again, I'll make reference to one of my Swiss clients. When the Swiss government announced their scheme, my Swiss client contacted their bank was told what information they needed, delivered that information, and in 48 hours, they had the equivalent of about £500,000 in the bank. So that was fast. That's taking more time here. And there are a number of reasons for that. I think probably the biggest one in defense of the banks, and this is the only thing I'll say in defense of the banks, but when you look at the regulatory environment that banks are operating in, all of, obviously you'd expect banks to be highly regulated under the Financial Conduct Authority, but all of their systems and processes have been designed and geared and built around operating inside a secure network environment where you either come to the bank through one of their online portals, or you come into one of their branches, or you reach out to one of their call centers, and everything has been designed and set up and structured so that it's inside that secure environment. And what you've got now is many of the bank call centers have been offshored to places like India, and India is in lockdown and the call centers are closed. And a lot of the banks are having to close or significantly reduce the opening hours of their branches. And all of their people are working from home. And they're not on secure bank computers. They're dialing up from their 6-year-old home Dell computer and using a TalkTalk or a Sky or a Virgin broadband line to access what would normally be highly secured networks. So the banks have had a huge logistical challenge to make sure that they've been able to put infrastructures in to make sure that they're not going to be in breach of those data security things.
With you,
enough about the banks.
Yeah.
Enough about the banks.
Yeah. So Sybil's and yes,
Sybil's.
as you say, ignoring the fact that the press have for once been disparaging and have negative things to say about something the government's trying to do. Who would have thought?
I know, it's amazing.
All right, but yeah. So Sybil's, what is it for, and what can you use it for? And how can you access it?
So the way it works, there are 4 criteria that you need to meet. You need to have turnover of less than £45 million. So this is not designed for big businesses. There are other schemes that are available for big businesses. This is designed absolutely focused and targeted on your SME business. So turnover must be less than £45 million. You must be substantially a UK-based business. There's no real definitions around that, but if you're a limited company that you're registered in the UK, if your trading office is in the UK, if the majority of your people are in the UK, then it's safe to say that you're a UK business. Even if you're an import-export business, as long as you've got some physical presence in the UK and there's an ongoing economic benefit of your business to the UK, then I believe you will qualify for that. But it's one of the criteria, but they've not set the details.
Okay.
The third criteria is that you must be what the banks would have considered pre-COVID-19 to have a viable business model. So if you were in a business that was failing, it's unlikely you'll get one of these loans. But if you were in a business that was doing okay, or even doing well, and then all of a sudden COVID-19 came along, and let's say you're a retail outlet. Well, your income from your shops has dropped to zero. To the extent that you can move online, that's fine. I have clients who are hairdressers and dentists, and they've literally their business is stopped overnight. I have a very good friend who runs a chain of gyms, and her business is just stopped overnight. But again, they're making efforts to move online. So you need to have had what would have been a viable business model had the coronavirus not hit, and then you need to demonstrate to the bank that as a result of the coronavirus hitting, your business has been negatively affected, and that's why you're applying for this loan facility.
What are the measurements that they would use then for determining is it viable? Was that the term that you used?
Viable, yes, viable.
Yes.
So typically,
how are they,
yeah. So what I've been speaking with people at HSBC, Lloyd's, Barclays, and Coutts, because I have a client who banks with Coutts, and they have all indicated that in an ideal world, they're looking for 2 years of annual accounts, so 2 years of published accounts, plus whatever your current management accounts are up to, say, the end of March, plus what were your projections for the current financial year, and then in addition to that, what are your new projections reflecting the fact that COVID-19 has hit, and what have you done And we'll come on to some of the other things that you can do to help reduce costs in a moment when we come on to the employment pieces. But basically, you need to show them where your business has been based on the actual results, both published accounts and current management accounts, where you saw your business going based on whatever business plan or forecast you had, and where you now see your business going based on what's happening with COVID-19. And in that context, I've actually teamed up with a couple of colleagues, and we've created a free-to-use assessment scorecard. So anybody can go onto that. The website for that is cbils-scorecard.co.uk. It's completely free to use. It's a 16-question scorecard that will come back and give you an assessment of whether or not you'll qualify for the loan, and whether you've got the bits and pieces that you need, or if you need help. And if you need help, then we've got other services and products that we can offer, but there would be a price for those. But for anyone to go on and just use the scorecard is absolutely free.
Okay.
And you can just go in and find out that.
I've typed it in there, and I'll post it if I've got it right. So cbils-scorecard.co.uk.
That's correct. Yeah.
All right. Hit return. Yeah. There we go. All right. Cool. The link is now in the comments section. Boom. Technology.
Excellent. Thank you.
All right.
And then the way this works, you can apply for an overdraft, you can apply for a term loan facility, or you can apply for asset finance under the scheme. So whether that's invoice discounting, or if you wanted to buy some kit or whatever. So any of those three. Typically what I'm hearing about is people are going for either the overdraft or the term loan facility. And again, it depends on the amounts that you're going for. You can, obviously your business would need to justify it, but you can, under the CBILS scheme, borrow up to £5 million. But for most SME businesses, they're not going to need that kind of scope or scale of funding. And one of the really interesting things, and this was something that initially came out and has since been adjusted based on feedback from the marketplace, but particularly for smaller businesses, loans of up to £250,000, there is no requirement. And in fact, the banks are specifically precluded from taking personal guarantees. So if you're going out and you need to borrow, let's say 225 grand, the bank cannot force you to sign a PG under the CBILS deal, which is a fantastic development, because that really demonstrates that, this is designed to support and help the small businesses to get through the challenging times that we're faced with.
Okay. Now, what would be the list of documents and assets, if you will, that you need for this application process? Could you just run through those?
Absolutely. So the first thing you should do is get in touch with your bank. And the banks are all recommending that you do it through their online portal. The majority of the banks now have a CBILS spot on their homepage. So just log onto your bank and you should be able to see a CBILS application process. Some of them have a little questionnaire for you to go through. Some of them allow you to download a form. In the early days, some of them said, just call us. And I'm aware of people who spent 5 or 6 hours on the phone waiting to get through. But I'm pretty sure that most of the banks now have the online system in place. All of the big banks are saying that they are giving a complete priority to their existing customers. So if you bank with HSBC, don't go shopping around for a CBILS loan from Barclays or Lloyds. Just go straight to HSBC. As I'm sure you can imagine, the banks are being inundated with claims for these products, and they're focusing on working through with their existing customers. If you think about it from the bank's perspective, if you're an existing customer, they've already got a track record with you. They've been through all the regulatory compliance of knowing who you are and understanding what your business and seeing what the cash flows and things are in that. And to go to a new bank and try and get that set up will just take unnecessary amounts of time. So just go to whoever you bank with. There's a list on the British Business Bank website. I think there are now 47 approved lenders under the facility. It includes all of the main high street banks, quite a few of the alternative lenders that have been out there. But your Lloyds, HSBC, Barclays, RBS, NatWest, Bank of Scotland, Coutts. I was actually talking to someone this morning in Belfast who just got a loan through Danske Bank. So there's a wide range of banks out there. So first port of call is to reach out to your bank, and they will tell you what their process is, and they will probably have some kind of an application form that you'll need to fill in.
Okay. Would you need to, or is it advisable to have something prepared before you do that? Because one of the things I wanted to cover for the viewers and listeners is how to be able to maximize your chances of successfully getting the funding. So should you do that?
I think in the first instance, go in and find out what's available. Do not start doing an application, but go in and find out. The bank should have information that say, here's our process, download your form, and these are the 6 pieces of information that we need. And then you go away and do that and work it, and then go and submit the application. So that would be my first port of call, would be to go onto my bank's website and see what they're saying they need and see what forms they're providing for me, without actually formally submitting an application, because then you can take that away, sit down and look at it, digest it all, take a view as to whether you've got all that information available, or do you need help from someone to pull it together. You may need to reach out to your external accountant for help. You can come to the CBILS scorecard site for help. And as I said, we've developed a product now that is available for those people who need our help, and don't have the resources in place, that we will work with the businesses to produce all of the assets that they need to submit and get a successful application through.
I'm with you. Now, what are you able to actually use it for as well? Could you give us a bit more detail for that?
There's no specific restrictions in the program. I think the main principle is you're using the funding to continue the success of your business. So if you want to use the funding to ensure that you can keep some members of staff on, that's fine. If you want to use the funding to continue driving your marketing campaigns, that's fine. If you want to use the funding to go out and buy some new assets, that's fine. If you're wanting to use the funding to pay yourself as the owner a dividend of $100,000, I think that one would be frowned upon. So it's really designed on protecting businesses through the interruption caused by the lockdown and the immediate aftermath of this. But I think anything that's a legitimate business expense that's clearly designed to help the business survive, which should be fine.
Okay. Now, one of the things that I was interested by is that indeed, as part of your day-to-day operations of the business, you can then use the funding to invest into marketing to help drive the business forwards. Can you give it any more guidance on that, or is it simply that you can use it for marketing so long as it's you've got all the documentation to back it up?
Based on everything that I've seen and read and heard, and I've spoken now with about 15 different people who've successfully completed their civils applications. Mm-hmm. And I've got a bunch more calls, so I've been reaching out to people through LinkedIn and stuff, just to gather that intelligence. But basically, as long as you supply the data that the banks are asking for and can demonstrate what you need the money for, and have a viable business, they're not restricting it. As I say, if you're going to do it to pay yourself a big bonus or dividend, it's unlikely that that'll go through. But if it's something that's going to be running to keep the business going, to keep the business alive, we'll come on to the employment schemes, and people will have heard about this concept of putting staff on furlough. But one of the problems with putting your staff on furlough is that your staff are not allowed to work in the business. And some businesses, whilst they may have lost the vast majority of their revenue stream, they can't just simply stop existing, stop having people. So they need to have some people carrying on. And so, you can use this to cover the wages of those staff who haven't been furloughed. Or you might, depending on the nature of the business, I'm aware of a dental practice that has a team of 6 support people. And we're kind of sliding into the job retention scheme here. I'll come back to that.
Okay. That's interesting. Okay, so it can be used, the Sybil scheme can be used for keeping your business fully operational, so you don't have to put your employees into furlough or on. Is it into or on furlough?
I think it's on furlough.
On furlough, there we go.
I think it's on furlough. I would imagine that, if you're running a business that normally had, let's say, 20 people, and you go back to the bank and say, well, I'm not going to put anyone on furlough, but I've lost 85% of my revenue stream, they'd question that. But if you went back to the bank and said, look, I'm putting half of my staff on furlough, but I need the others because we've got all of these activities that we're carrying on to do to support our clients, that's a reasonable argument. The bank will certainly look to see what you've done to reduce your cost base.
With you. And what sort of payment terms or loan term, that's the correct way.
Yeah.
What loan terms are we talking about here? And also interest rates. How are they?
Absolutely. And I have to say they, on the basis of the people that I've spoken with so far, remarkably attractive rates and terms. So overdrafts are available for a period of up to a year. Anything longer than that will be a term loan facility, and under CBILS they can be up to 6 years in length. And interest rates are currently, there will be a bit of a risk weighting depending on the nature of the business, but they're currently in the 3 to 5% per annum. So very, very attractive rates of interest that are on offer. The other really, really good feature is that in the first 12 months of the CBILS program, the government will pick up all of the interest costs, and the government will pick up any initial arrangement fees that the bank charge. So, you could almost make the argument that says, I'm going to go out and borrow some money and I'll just stick it in the bank so that I know I've got it and I can repay it on day 364 and not have had to, not have had to use it, but not have had any cost associated with it. Again, I think, businesses that are clearly very, very cash rich might find it a little more difficult for the banks to be convinced to lend them the money. But it's certainly worth looking at. But again, this whole program is designed to help those businesses that would have been fine but for the impact of COVID-19.
With you. And what I'm picking up from this is that would have been fine is subjective, right? So
it is, but that's why they want to see your past financial statements. That's why they want to see your current management accounts. That's why they want to see your projections of this is what the business would have done and this is what the business is now doing.
Okay, cool. Just to recap where we are so far, if you've recently joined us, welcome along. We're here live with David B Horne, talking through how you, as any business actually, so long as your turnover is under 45 million, is that correct? There we go.
Yeah, correct.
Turnover, if it's under 45 million, how you can make the most of all of the government financial support that's on offer for you to get through and, all being well, really thrive after the whole virus thing has passed. Hello to Edward
Indeed.
Lopez as well. Edward, good afternoon, sir. So that's the CBILS scheme.
One last thing, and this one varies by bank to bank and varies on the amount of the facility, but I was speaking to one person this morning who got a facility of 210K from Barclays, and not only was there no interest charge because the government's picking that up, but they're doing it over a 6-year thing. And Barclays have said they don't even need to make the first repayment for the next 12 months.
Could you run that by me one more time? That's quite something.
Yeah. So they borrowed £210,000 over a 6-year period.
Yeah.
The government picks up the first year's interest anyway, and Barclays have offered it to them on a facility where there is no capital repayment in that first 12 months either. So literally 210 grand comes into the bank today, and the first repayments don't kick in until a year from now.
That's incredible.
It's incredible. It really is. The furor that was coming up initially that we talked about, I think, was justified. But the banks are starting to demonstrate that they are paying attention and they are looking at doing this. I was talking to some senior bankers at HSBC last week. They've earmarked £8 billion on their balance sheet to support SME businesses under the CBILS program, and I know that some of the other business banks are offering similar amounts. So there's going to be a huge amount of money available here.
That's a great case study example, if you will. Wow.
Yeah.
Okay, so in total, there are 6 schemes available to help through this. That was number 3. It's almost like a reverse top 40 countdown coming up.
Exactly.
The UK's chart number 1. Right, let's do number 4 then. So what's the 4th scheme?
So number 4 is the Coronavirus Job Retention Scheme, CJRS, and closely linked to that is number 5, the Self-Employed Income Support Scheme. So under these schemes, this is designed to enable people to receive some money. So if you're an employer and you have people on a PAYE payroll, then you will continue to pay them through your PAYE payroll. But if you place them on furlough, which means basically there's no work for them to do, they're sent home. They're specifically not allowed to do work for you. They're allowed to do training. They're allowed to do other things, but they're not allowed to work for you and your business in a revenue generating or business supporting capacity. The government will pay 80% of their normal monthly salary up to a cap of £2,500. So if you had a staff member who was on £2,000 a month, they'll get £1,600. If you had a staff member on £2,500 a month, they'll get £2,000. If you had a staff member on £3,000 a month, they'll get £2,400. And then anyone who's on £3,125 or more, they hit the cap and they get £2,500. And this is designed just to make sure that people are getting a flow of income and to stop companies having to do mass redundancies in the knowledge that in however many months' time when we come out the other side of this, then I'm going to have to go out and recruit new people and train them and all that. And far better to keep my staff on my books, keep them employed by me. The government supports the vast majority of their wage costs up to the cap. But you know, if you think about it, none of us have commuting costs going on right now. None of us is going out clubbing or out for dinner or out to the pub. So, you know, a lot of those discretionary expenditure items just aren't happening. And so the view is that, you know, for the vast majority of people, if they're on that kind of a reduced cost base, if they're able to get by on 80% of what their earnings are, then that's a, you know, that's a good scheme.
Yes, and just to clarify, that's the cap there of $2,500 per employee. That's per month.
That's per employee per month. That is correct. Sure. That is correct. Yeah. Now we don't. This isn't an open-ended scheme. It was initially announced. It was actually backdated to the 1st of March. So if any companies took early action and made staff redundant, they can actually go back and re-employ them and immediately furlough them with a view that says, you know, if you were employees that we wanted to keep on, but we simply took early action, you can actually go back in and retroactive to the 1st of March, make a claim for them. And it runs at the moment, it runs until the end of May. I would not be at all surprised to see that extended, especially if, as has been teased in the press this week, if the UK lockdown is extended further. So I wouldn't be at all surprised to see that continue.
Same here, actually. Yes.
And so the way this one works, you have to have had a PAYE payroll in operation on or before the 28th of February. If you didn't, unfortunately, you won't qualify. And if you've got new employees who've joined after that date, unfortunately, they don't qualify. So these are some of the examples of things that have slipped through the cracks. But as long as you had a PAYE payroll on the 28th of February and you were paying people through that at that time, then you will qualify for this. HMRC are building a specific portal on their website that will be used to administer these CJRS grants. We don't yet have any detail other than that they're working around the clock and they're still saying it's going to be done on time. We'll have to see how that goes. My understanding is companies will still continue to pay their employees on payroll, and then they will be able to claim the money back from the government. So again, in terms of cash flow planning, I'm advising people that in a worst case, it might be that you pay your people at the end of April and you don't get your money back until the end of May. Hopefully it'll be better than that. Hopefully it'll be much, much faster than that. But I'm advising people in their planning to allow for some lag, because we don't know how well this scheme is going to work. And, anytime a new IT project is delivered and then gets sort of 5 million businesses immediately signing in and trying to apply for the thing, they're going to have some bugs to deal with.
To do that. That was going to be my next question. What is likely to be the lag for businesses? So you think it's about 2 months then from?
No, well, I'm saying to people. So the government has said that the portal will be live by the end of April.
Yep.
And I'm saying to people, and this is just me being conservative, I'm saying to people, don't count on the cash coming in until your May payroll is due, just in case. Hopefully it will, and hopefully I'll be proven wrong, and this will be the first ever large-scale government technology project that went completely according to plan and didn't have any bugs in it. But I've been around too many of those things to actually believe that there won't be any hiccups along the way.
Yeah, but in fairness, I think, I'm a fan of what the government's doing at the moment, and crikey, they're up against it.
In principle, what they're doing is fantastic, and it's in scale and in speed, it's unprecedented. It really is in peacetime. I think some of them are now they're now using war terminology because we're effectively at war. I think it was President Macron yesterday when he announced that the French were going to have lockdown for another month, actually used the term guerre, so war. There we are. But no, it's unprecedented. Now, so that's the scheme for people who are on PAYE.
Yes.
2 points to make here. One is for people who are company directors who might be paying themselves a low PAYE salary and then topping up with dividends, which is a long tried and tested approach that's perfectly legal under all of the tax scenarios. But sadly, the way this program is designed, if you're paying yourself, let's say, a salary of £1,000 a month and then topping up with dividends, then you will only be eligible for the CJRS on the 80% of that salary. You're not eligible for any cover on the dividends. So that's one area where business owners in particular have been hit a bit hard. I've actually written an open letter to the Chancellor. We tried to get that published in some of the mainstream press. Unfortunately, it didn't go there. But I've actually had yesterday, I ended up getting an op-ed piece in the trade publication Accountancy Today that's specifically highlighting that issue about company directors, and the next issue, which I'll come on to, which is for the self-employed. So if you're self-employed, this is where you're not paid through a PAYE payroll, but you have to file a self-assessment tax return that includes your accounts. You'd probably work with your external accountant to do that, but you could certainly check with them. But the concept behind the self-employed income support scheme is exactly the same. They're saying you need to demonstrate 2 years of earnings as a self-employed person, and that they'll pay 80% up to a cap of £2,500. However, where it falls over is they've put in an additional feature, and this was the other thing that I specifically wrote to Chancellor Rishi Sunak about, which is that it says that if you're a self-employed person and your earnings were more than £50,000, you don't qualify. And my point to the Chancellor was, why is it fair for someone who's on a salary of £50,001 to get £2,500 under the scheme, whereas a self-employed person on £50,001 gets nothing? So hopefully we'll see that one rectified. The other key difference on SEISS, the Self-Employed Income Support Scheme, is the portal for that, they're saying, is not going to be ready until June. So if you're a self-employed person, you may need to seek out other ways to supplement your cash flow between now and then, whether that's through getting a CBILS loan or speaking to your bank about an overdraft, or there's lots of other things that are available. I know a lot of banks are talking about mortgage holidays. I know there's some lobbying going on about people paying rent and trying to get holidays. So just look at what's available out there. I've been concentrating on the programs that are available for SME businesses because that's kind of my area of specialization. But I know there are other things out there. But if you are self-employed, you need to bear in mind that the money coming under that scheme, whilst it can be backdated to the 1st of March, it won't actually be paid until sometime in June.
Got it. Okay. Now would be a good time for me to mention, but if you're watching right now, and hello to Gamdan Alriki, hello sir, and Simon Arundel, good afternoon. If you or anyone else has got specific questions that you'd like to ask relating to your situation or your business, please do ask in the comment section, and David will answer them. So if you want it fine-tuning, something's not quite clear, do ask. We will cover that. There we go.
Yep.
All right. So that's the self-employed income scheme.
Support scheme.
Support
Just
scheme.
to let you know, James, my headphones are making noises like they might be running out. So if they do, I'll take them out and I'll just play with the volume on my phone. We'll get it sorted. But if people see my hand coming like that, that's why.
Okay, sure. I'm used to it. Every week we have some sort of a bug. I like to think it gives the show character.
Absolutely.
Christ.
So the final scheme, which isn't new, but it's something that the government haven't really promoted historically, is something called time to pay, and that's a scheme within HMRC where if you're struggling to make a tax bill or a PAYE payment or a VAT payment, you can actually phone up HMRC, have a conversation with them, and ask for a period of time to make your payment. Depending on the nature and the size of what you're looking at, typically they're certainly allowing deferrals of up to 3 months. And in certain cases, I'm aware of deferrals or staged payments over periods of up to a year. So just again, designed to help you with the cash flow. To access that, all you do is go onto Google and type in HMRC time to pay, and it will take you to a page on the HMRC website that, depending on the nature of what the tax is that you owe, you phone this number or that number or the other number. Perfect.
You really can't help but noticing that the whole thing, is just designed to keep the country moving.
Exactly.
I don't follow the news anymore. Well, I don't read newspapers, and I haven't done. I haven't done for 2 years, and I'm a lot happier for it. But it's some things you can't help but come across. But this is just inspiring. Even though, sure, it's a bad thing we've got to deal with, but it's just reassuring and inspiring. Okay, could I put some questions to you? We've got some.
You certainly can.
Questions from Gamdan and Shane. So Gamdan, first of all, good question. He's asking, how can any of the funds be used for future businesses?
Not really. So if you're, it's a really good question. If you're borrowing money and it's going into a limited company, the money has to be used for the purposes of that limited company. If you were developing a new product or service in the context of that company, you could probably get around those limitations. If it was a complete pivot to something totally new and different, so if you were running, let's say, a marketing agency and you decided to launch a new tech business focused on Bitcoin, that would be completely different. And that, you could hide that from your bank and then borrow the money and then do it. But if the bank finds out, I would expect the bank to come back and grab that money very quickly. So I would not recommend going down that road. This is, again, if you think about it, this is designed to help existing businesses carry on. So, let's say you're borrowing $100,000 and you wanted to earmark 20 grand of that for some product development. So, I mean, one of the things definitely a lot of people are doing is, well, how do we pivot to be on more of a delivery of our business through an online mechanism? So I have a very good training business. She's doing a lot of work on. Oh, did I lose you there?
Yeah, I think now the earphones have died.
Yeah. The headphones just died.
Do you want to put those?
This is the hand bit. So
would you like to put those on charge? We'll
I've just got to turn the volume up on the phone.
Okay.
Right. Speak to me.
Hello. So
Yeah.
have you got the? Someone just gave a thumbs up there for your smooth handling of the batteries running out. So
Go.
are they in the charger? So we can probably get you back on the earphones in about 5 minutes, right?
Yeah. Yeah.
Okay, cool. All right. Where were we before? I think you'll have to speak up
So
as
we
well.
were in the middle of the discussion about launching and using the money from the Sybil's loans for a new business. I would suggest that if you can demonstrate that there's a pivot within an existing business, you should be okay. But if you're literally looking at starting something brand new, I wouldn't do that right now.
That's a concise and fair answer, actually. And yeah, you did actually just mention before the sound dropped out that you had been working with a lot of people who were seeking to pivot and adapt their businesses to working more online, which is a totally fair concept. And I guess a way of describing it perhaps would be in keeping with the spirit of the funding, which is to help businesses drive forward and get through this. Is that a good way of describing it?
Yes, I think it is. But again, just be careful that doesn't become the overarching thing. So this friend of mine that I was talking about runs a training business, and historically they've done all live event training, and they're now looking at pivoting some of what they do. They still feel for some of the products that they offer, they feel is still best in a live event environment, but they're starting to look a little bit more open-mindedly at, well, what are some of the things that we could take online, and in order to do that, we need to invest in some development, and we need to get some new software, and we need to film and things like that. I think if that were part of an overall Sybil's application, that would be okay.
Okay,
but if it was if it was a training company saying, well, we're going to open a gym, that wouldn't be okay.
With you. Okay, Gamdan, I hope that answers your question there. He did actually follow on from that, saying that he was working on a new business and then paused.
If he's working on a new business that's totally new, I'd keep that one paused for the time being.
Okay, that's fair. Okay, right. In that case, next question from Shane O'Brien. Thanks for the comment. He says this is brilliant, guys. Appreciate that. To be fair, David can take credit for that. So he says, So Shane is in the dividends category. Do you think this issue will be addressed? I know you covered it briefly earlier, but
I wish I could say yes. Unfortunately, the government over the last 4 or 5 years has gradually shifted its attitude towards people paying low salaries and high dividends away from what used to be the tried and tested route. They changed it from no tax on dividends as long as you were a 20% taxpayer to now you have to pay tax on dividends. And the Chancellor actually in his statement when he was announcing this, made sort of veiled references to the challenges of different people on different tax schemes and how nice it would be if we were all on the same kind of a situation. So unfortunately, I don't see that one going. Fundamentally, I think it's wrong, but I'm not the Chancellor. Unfortunately, no. I think if you're on dividends, that's going to be one that, and I'm on dividends too. I think that's going to be one that we're going to have to take on the chin.
Same with me and my business, and actually taking on a chin was the first thing that came to mind when all of this was announced. I thought, well, there you go. It's more tax efficient to have minimal PAYE and everything else in dividends, but
and we're not breaking the rules. It's efficient. We're following the law that's been set out and followed for years and years and years.
Okay, Shane, I hope that works as a good answer, as David does this day in, day out, and has been writing a lot of op-ed pieces for various publications. So I think that's as accurate an answer, short of speaking with the Chancellor himself, that you're likely to get on that. Yeah,
which I tried to. I did send him an open letter.
Good. Well, yet to reply. There you go.
Yeah.
All right.
Oh, hang on, he's calling me now.
Yeah, I told you to put it on Do Not Disturb whilst doing the show. Right, so those are all the 6 funding schemes. That's, I guess, is the first half of the show. Now, what I did promise viewers and listeners is for us to talk about...
Before you do that, there's one other thing that I just want to briefly touch on. It's important. And this is one that didn't get a lot of press, but it was to do with a temporary relaxation of the insolvency rules.
Oh, yes. Okay.
And this is relevant to anyone who runs a limited company and is a director of a limited company. Under normal insolvency law, there is something that's called insolvent trading, which is when you continue the business to trade when you know or you ought to have known that you were not in a position to meet your liabilities as they fall due. Mm-hmm. Insolvent trading is a very serious criminal offense, and the penalties for insolvent trading can range from the courts stepping in and requiring the directors to sell personal assets to make good money into the company, all the way up to imprisonment on the most serious cases. So the whole thing is very serious, and insolvent trading is something that, you know, anyone who knows anything about running a company ought to have heard of the concept of insolvent trading. The government has temporarily relaxed the rules around that such that directors may continue, if they are operating in good conscience through this coronavirus crisis, they may continue to trade if they believe that it's the right thing to do. Again, there's no law yet, so there's going to be loads of questions as and when. But I think if you take the perspective that, you know, that you're not doing this to be a charlatan or a crook or a fraudster, but you're a genuine business person doing your level best to get through this crisis, and if you've hit a hard patch, this insolvent trading restriction temporarily will not be applying. So anyone who's been running a company and has been worried about that, that's one thing that they don't need to worry about quite as much.
Okay. One thing that's I think is probably worth referencing again is that the whole thing seems to be driven by, if you're running your business and you want support from the government for this, the spirit of the whole thing is for you to keep trading. So if you're unsure, so long as you're wanting to drive it forward and you can demonstrate that, then whilst everything hasn't been written and confirmed, you can hedge your bets on that you will be looked after. Is that fair to say? Okay.
I think that's a very fair assessment.
I tell you what, actually, I think our 5 minutes is up, but hopefully your earpods should have had enough charge now.
Okay.
And whilst you're doing that, I will just recap then. So, purpose of the show today is to run you through how you can make the most out of all of the financial support that's available for businesses during COVID-19. There we go. And we've just run through all of those now. Now, coming up next, we're going to go into the part for what to do after all this is passed. And the working title for this episode was Survive and Thrive, but I thought that was a little bit cheesy, but it was a good working title. So it enabled us to work out what to do just for the first part, which is survive. So next we're going to go into the thrive section of it. And this is very much related to your new book, which, pow, I've got here. Thank you very much for that copy. Add and then multiply. Look at that, both on screen at the same time. Oh, you can't see it, but I'm holding your book up. Now, in David's new award-winning book, all right, I'm going to stop sounding like an advert now, but I was impressed by that. So in your new book, you have this methodology called FACE, isn't it? Which is fund, acquire, console, and then
consolidate.
Exit. Consolidate. So yeah, console. Yeah, console is when you is where you soothe someone, isn't it? Oh,
exactly.
Right, that was a typo on my part. Marvelous. Right, so fund, acquire, consolidate, and exit. That's the next part. Okay. Oh, but by the way, Shane was saying, just wanted to follow up from that, and he was saying that given that he's in the dividend category, he's saying that it might well be the loan route that's applicable for him. So yeah, but hey, out of everything, not a bad thing. I'd say. So, thriving next. So, could you talk us through your FACE methodology then? Yeah, that would be good.
Absolutely. So this is something that I developed over the last 20 years of my career. And starting in the year 2000, I was the European CFO of a very acquisitive PR agency group that was headquartered out of New York, and they had just expanded into Europe. And so I was working as the European CFO together with the European chairman. We had a brief to build an agency network by acquisition. And we had New York's checkbook, which was great fun. So we actually went out over a period of 2 years and bought 7 PR agencies and put them together. And that was my first real exposure to the world of M&A. And that was going so well, and we were having so much fun that Interpublic Group decided to buy out our New York parent company. And we got merged into Weber Shandwick, which was IPG's PR brand, who was way bigger than us. And so after an integration and handover period, I left the company. And then I ended up joining an AIM-listed business. So AIM being the junior market on the London Stock Exchange. And I 8 years as the CFO of 2 different AIM-listed businesses where I raised a lot of money and did a whole bunch more acquisitions. And then I left PLC world in 2010. I've been working exclusively with entrepreneurs since then. And over that period, kind of developed this methodology, but finally got the book written and published last year. And that really sets out. So the whole idea is, so fund is about raising money, raising external capital for your business, whether that's debt or equity funding. Acquire is then going out and buying other companies. Consolidate is putting those companies together. And then exit is ultimately selling your business and going on to do whatever you want to do in the next stage of your life, whether that's to launch another business or start a charitable activity or do something that's giving back, or some people want to just go and sit on a beach. But I hope that the people that I advise at least decide to do something that's going to give something back to the world, because just going and sitting on a beach is kind of boring and lazy and a little bit greedy, in my opinion. But there we are, turn it over. And so where I see, a lot of agency type businesses having the opportunity to thrive on the other side of this is that those who come through this process intact and, with a solid model, and who have looked after their people and looked after their clients and kept the dialogue open, even if the revenue streams weren't flowing. But the people who've maintained and managed their businesses, when we come out the other side, will be in a strong position. And the people who haven't done that are going to be in a weak position. And those who are in a weak position are going to be facing a lot of challenges and a lot of difficulties, and will naturally, with anything where there's a big recession, valuations fall. And there will be opportunities for successful companies to go out and acquire other businesses that fundamentally were good businesses but didn't respond well to the crisis. And so I think there will be opportunities to make some very attractive acquisitions of other companies, and that enables you to widen the range of distribution of what you're offering to your clients. So you could look at going out and buying a competitor. You could look at going out and buying one of your upstream suppliers. In some cases, you could even look at buying some of your downstream customers, and just widening the range of your business that you have available, and having an offering so you could take your offering, and now you've got 2 companies worth of clients that you can offer it to. You can take their offering and offer it to your existing clients, so that there are a lot of opportunities to really grow and expand your reach into the marketplace. I'm a big fan Warren Buffett, and I can just imagine that Warren Buffett is licking his lips in anticipation. He's a very patient man, and he's not gonna do anything rash or quickly. That's not his style. But I can imagine Warren Buffett has a list of several hundred companies that he really, really likes, and he's just going to wait until the market offers him an opportunity to buy a big stake in one of them, or even gobble up one or two of them completely and bring them into his portfolio, because that's what he does.
So is that to say then that right now then you would be advising perhaps businesses, so long as they have the cash availability or access to funding, to look at acquiring other agencies or companies right now?
I would certainly advise them to start looking at that if that's something they've not been looking at. If it's something they have been looking at and they've got their eye on one or two, potentially entering into dialogue with them to see how the other businesses are doing. I wouldn't rush it, because I think none of us know how this thing's going to pan out. But I wouldn't be surprised to see this lockdown last for a while longer. And once the lockdown is lifted in whatever ways it is lifted, I can imagine it's going to be 6, 9, 12 months easily before the economy returns to any form of normalcy. So there's plenty of time for people to look at and identify what are the right things to be doing. But it's certainly something that if you've got a solid business and you're nurturing that solid business through this crisis, it's a great opportunity to grow and scale up. And just to give you an example of some context here. So when I joined the first AIM-listed business, the founder had been running it for just over a year, and the business had 1.1 million pounds of turnover and about 400,000 pounds of profits. In 3 years, we raised 60 million pounds of debt and equity funding. We bought 7 companies, and when I left that business after 3 years, we had grown from 1.1 million to 28 million in turnover. We had grown profits from 400 grand to 4.5 million. We had operations in 3 countries, and we'd grown our staff numbers from around 25 to around 300. So that kind of massive scale up is possible with a focused strategy on growing through acquisitions. And if you look at any of the big players in the agency sector, and just look at the top holding companies, most of which are the big ad agency groups, they're always out there looking at opportunities to buy things. And this is something that, again, set out in my book, takes what those businesses have done and applies it in a way that allows small businesses to learn from that and to follow the same set of processes and go out and achieve that in their own in their own way. But this is something that big businesses have done for many, many years and is available now for small businesses who are willing to think a little differently.
Nice. So that's can I ask you ever so briefly to take out your earplugs and put them back in? I don't think when they reconnected it's as loud as it was before. Could you just
okay, yep,
let's try that. Okay, this is like an audio technical
I'll put them into the thing and let them totally reset.
Yeah.
And then
awesome. Hey to JP McLaughlin from Light
How's that?
Steel. I think that's better. Hello. Right.
Okay.
So you just covered funding and acquiring, and so consolidate and exit is the last 2 steps then of this whole sequence.
So consolidate is about putting companies together, and this is where the real challenge comes up. And if you read articles about M&A destroying value in companies, and there have been loads of examples of them, it's in the consolidate phase where the real problems arise, because you're looking at putting 2 companies together that potentially were, cutthroat competitors. I mean, when I was in the PR business, one of our biggest clients was Fujifilm, and one of Weber Shandwick's biggest clients was Kodak. And although it wasn't their public mission statement, their private mission statement of Fujifilm was to kill Kodak. So there we were having two major clients with a huge conflict. You've got to address that. But because we knew about it, we worked out strategies. What could we do in order to segregate the teams so that we didn't lose the clients? And you know, we weren't able to keep them all where there were conflicts, but we didn't lose all of them either. And you know, looking at how do you bring your teams of people together? How do you bring the systems and processes that you've got? Do you continue to run the businesses as completely separate individual entities that, apart from common ownership, don't have anything in common? Or do you bring them together to create a whole that's bigger than the sum of the individual component pieces? And these are all, you know, big strategic decisions that you need to take. And then you need to execute on them and carry those through in a way that hopefully brings the people and the values and the culture forward, that makes the consolidation process successful.
Sure, and then that then precedes the
eventual exit, which is when you decide that it's time to sell. And you know, there's no rush on that. I mean, I've advised clients on funding, acquiring, and consolidating, and they've made very clear to me that they're having far too much fun to consider exiting yet. On the other hand, I've got other clients that I'm you know, advising on doing exits now because they've reached the decision that that's the stage in their life and in the life cycle of their business that they've brought it as far as they want to, and let's let someone else have a go at, you know, taking it on and taking it to the next level.
Nice.
Or they've had a life-changing thing that said, I want to completely change what I do, and you know, I've been doing this for X number of years, and now I want to do something different.
Which does happen, yes.
It does.
Right. Well, I think that's covers really quite beautifully everything that we promised to today. And you know what? I think the main takeaway for me from all of this is that you do need to, as a business owner or business executive, get onto your own bank's COVID support page and follow their step-by-step process for gaining access to the funding. And the other thing I've picked up is that it's all being designed so that it's actually there to be used. And I think I came across some sort of statistic earlier, and for the sake of covering it here, I've forgotten it. David, maybe you can help me out with this. But there's been a relatively low take up on it so far. Did I make that up? There has been. There was a piece in the press recently that said I think it was 1.9% of businesses have applied or are getting through or something. I can't remember the exact statistic. It is quite low. Right. And I think that's partly caused by the fact, as I said at the beginning, that the banks themselves are having to adapt their systems and processes. It's partly caused by the fact that there was a lot of confusion up front when the scheme was originally announced, where the banks were saying, oh, well, you're going to have to do personal guarantees. And a lot of people were saying, well, you know, my business is in a difficult situation because of the COVID-19, and the government's come forward and put this up, but now my bank's telling me I got to sign a personal guarantee and, you know, put my house on the line. I'm not sure I want to do that. But that's been clarified now. So up to £250,000, the banks cannot ask for a personal guarantee. Yes. Okay. Well, could I then hand it over to you then to just summarize everything we've talked about, and what would you like the audience to take away from all of this?
What I would like the audience to take away from all of this, number one, stay positive. We are all in this together. I promised James I wouldn't use any expletives, but I've created a hashtag WAITST. We're all in this situation. You can think of a shorter, slightly ruder word, together. So we are all in this together. And, you know, stay positive, stay focused. I'm advising everyone who runs a business to reach out to their customers and talk to them. You know, you don't have to do it every day or anything that's out of the ordinary, but just pick up the phone and have a chat with the people that are important in your business. Talk to your customers, talk to your suppliers, talk to your staff, keep people informed of what's going on. It's remarkable how much more receptive people are to hearing real life bad news stories, because we are all in this. And I'm aware of people who've gone to their landlords. I have one client who's in a 15-year lease. They're 8 years into it. They've never missed a rent payment. And literally overnight, 90% of their business disappeared once the lockdown came. And they reached out to their landlord, and the landlord said, next quarter's rent, don't worry about it. We'll pick it up when this resolves itself. I wish I could say that all landlords were like that. But I think, I think people are being reasonable to the greatest degree. So I'm just advising everybody, do what you think is the right thing inside your business. Keep in touch with your customers, keep in touch with your suppliers, keep in touch with your staff. And, together we'll get through this crisis. I think I have no idea what the world and the business world is going to be like when we get through to the other side, but I have no doubt that it's going to be different from what it was when we went into this. And just, take the time, enjoy life. We're all stuck at home. For those of us who have kids, enjoy the fact that you've got your kids with you. It's kind of a one-off experience, and the sun is shining. It's springtime. Try and look on the bright side, and we'll get through all of this together. If anyone wants to have further conversations, James, I guess you'll put how to contact me up on the
Yes.
on the notes.
It's in fact it's
Perfect.
on the top there. There you go. If you've recently joined us, by the way, we did earlier on in the comments section put a link to Scorecard, which you can do to help you with your funding application. It's clickable on there, but cbils-scorecard.co.uk for the benefit of everyone listening on the audio podcast. There we go.
And my book.
There's his book. There we go. Awesome. So, there we go. I think that wraps everything quite beautifully. And really, it would seem the most important thing is to contact your bank and go through that application process.
Yes.
That's not application process. Their guidance. There we go, for applying for the funding, because so long as you've got a viable business and you're wanting it to use the funding to drive forward and to continue to be a success, and with that growth, the funding is there for you to for it to be used.
Yes, it is.
The government wants you to do that because the government wants to have successful businesses. Right. Before we go, I've got one. Oh, there we go. Shane just saying thank you very much for answering all his questions. It's a pleasure. Right. Well, in that case, that's everything. So, David, live from Ealing, wasn't it? Live from Ealing. Thank you ever so much for joining me today. Really appreciate that.
My pleasure.
Pleasure. And if you've enjoyed watching, then please do subscribe, because we do the 414 Live for you each and every week. It's for you as a B2B marketing professional or company management where you've got an active interest and or role in sales and marketing for the company. And if you'd like to see previous episodes and to subscribe, bang, web address on screen right now. There you go, the414.net for all previous episodes, and for you to subscribe through either email or one of the million or so podcasting apps that are available that the show is syndicated worldwide on. There we go. Well, look, thank you ever so much for watching. Really do appreciate you taking part, and I also hope this has been of real value for you, because it's important that your company and everyone that's part of your team does well throughout all of this. All right. My name's James Rostance. This has been the 414 Live. I will see you next week.